Speaking of lessons from the pandemic, but lessons from the last 35 years as well, as you've built out PVR and scale. I want to come back to that issue because a lot of the scale has been driven by way of M&A and acquisitions, and of course INOX was the big one. What would you say have been the non-negotiables as far as being able to assimilate and integrate a large acquisition like that?
I think non-negotiable right from the beginning was to stick to the fundamentals. And I was really privileged to have somebody like Renuka and Vishal Mahadevia, who's Robert Pincus, and mentors like Sunil and Rajiv Singh and so many people. Fundamentals, unit level economics. So when I was doing organic growth as well, location has to be right, the rent has to be right, developer has to be good, development has to be good. That was organic. Inorganic also, am I acquiring something which is going to be value accretive or value destructive? Is it an ego, vanity acquisition, or is it something that is missing in the current portfolio and is going to add value? Number one question. If the answer is yes, after that, am I paying the right price for it? Fortunately, I had these incredible people who were always advising me, okay, for Satyam down south, this is the right price. And today, 33% of our circuit is south.
Yeah, people don't realize it, that actually the south is your biggest market.
Absolutely. Yeah. And India is, and to be honest with you, that's been the saving grace post-pandemic, because there, the movie habits haven't changed. So whatever I've told you in the first half of the interview probably is not applicable to South. South people are still coming and watching movies 12 times a year. And people are content, it's up by 95% recovery. 99% recovery is there. So that acquisition.
Really, that tells you then that it's the content piece, right?
Content and habits. Regionally, I wasn't very strong in South. So Satyam acquisition did that. But I had to pay the right price. And the asset had to be qualitative. Cinemax, we were very weak in West, was an important acquisition. DT with DLF, important acquisition. So these all three were, I think, we tried our best to make sure the fit was in terms of value as well as quality and strategy was okay. And we needed that leapfrogging because economies of scale were only coming if I had 800-900 screens, and all my costs on CapEx and OpEx became much better to give me the margins that I was enjoying pre-pandemic. Post-pandemic, it was not an acquisition, it was a merger. And again, fit was good because INOX also was building very high quality circuit. Again, we didn't anticipate that the
bounce back would take as long.
Would take that long.